Traders Anthony here. We're looking at gold. I've got it open on the weekly chart. So we've had this bearish break here on the weekly. Break of market structure, lower low, as we can see at this point here. We'll just mark that up and then we'll go down the time frame. Bearish break of structure on the weekly, on the daily time frame. Okay, so we can see how this trend has been compromised here. Lower highs, lower lows. So this is clearly trending bearish on this time frame, as we can see. Now it's traded up into these highs here of this range. It's been fairly range bound, but with a bit of a bullish run recently on this time frame. And I'm looking at where this is most likely to travel. It's currently taking out the highs above these candles. This is a big resistance level here. All right, we've got resting buy stops above here, these two candles here. Prior to this sell here, resting buy stops above here, they've been taken out. In fact, this could be potentially reversing. It's not confirmed yet, but what I'm seeing on the chart is these lows under here being taken out. So we've got big liquidity here, sell stops, and we've had this move down under here, taking out these stops. Okay, so this is definitely a spike into liquidity. It's a deliberate stop run prior to this rally. Right? We go down to the lower time frame. We can get a bit closer to this. On the bullish note, these are my targets. We've also got this high here. I mean, I am bullish, but on the lower time frame, we'll get the volatility. So let's just mark this up on the daily, so we've got a bit of a roadmap. Now the next port of call is going to be these highs here, and we've got this gap or void to trade through. If we break up through here, a break above these highs here, then that would be a nice run through this range here. Anyway, that's a way off yet. Let's just come back down to this price action here, and we've got support under here. Okay, we'll just mark that up and call it that. Support zone, done. Okay, so just looking at the candle wick below this, well, this candle here, and the candle wicks above here and here. Okay, so these are our key levels. So let's just have a look at this now on the 4H and to get my bearings with this. So, I mean, what we've got here is the relative equal lows through here, and then an aggressive spike down followed by this displacement. Okay, a really strong rally. And yeah, I mean, this is telling me that we're possibly seeing a reversal occurring here, possibly. All right, and why I say that is mainly due to the fact that we've got liquidity, a big build up under here, and it's hit it with a vengeance. And I mean, obviously that's given smart money the liquidity they need to pair their orders for this move here. Okay, so they're unloading up here now. Given that this is a big level, I mean, it has wicked through here a bit. Do they pull it back a bit further before we see any more movement north? That's the question. All right, we'll go down to these levels here. Yeah, I mean, they'll stick with the 4-hour time frame. We've got this nested level here, 4-hour and daily. I'll just mark that up as a 4H. And we know the red is a daily, so that's a 4H level that we've got here. Okay, so it's broken through this 4-hour order block, pushed north through that. We've also got on the 4H, I'm just marking up these nested levels. I'll just grab the candle body and the candle body, something like that. So we've got this nested 4H and daily here, and this nested level up in here. Now, the thing that concerns me with this is, I mean, yeah, we are seeing a break of market structure here, right here. But the thing that concerns me is this. I'll show you. See this candle here, this green candle. Okay, so what we get is the liquidity under, the stop run. This is an accumulation range, and then it trades off with a vengeance. And we have this bullish order block here on the daily, as well as this thin candle. It's 4-hour order block, I should say. We'll just mark that up as a 4H. And then we have this thin candle, this green candle, nothing left and right of it. We've got this bullish imbalance on the 4-hour time frame. That's a target. Bullish imbalance, so we'll just mark that up as such. Imbalance 4H. I mean, what makes more sense to me would be the pullback down to rebalance, looking to rebalance here after this move. So I would say if you grab a Fibonacci, and we've got this low to high here, See the 50 and the 61.8? That's an ideal. If I'm long, if this is a break of market structure and my bias is bullish here, then my entry is going to be, it's got to be below this 50. This price swing low to high, the halfway point is 50%. Right? Anything below that is discounted. You know, you want to consider that the banks don't buy at a premium, they buy at a discount. And anything under this 50 is discounted. For me, to get involved with this, I'm going to be looking at a buy at the high of this imbalance, 50 to 61.8. That is going to be my setup. Stop loss could go at the base of this bullish order block here. And I mean, that's a 3.29R target, but we've got these targets up in here as well. And my next port of call on this time frame is going to be bearish order block on 4H. So we'll just call it that, 4H. OB, something like that. I hope this is making sense, guys. I'm just looking at this from the point of view of where is the market's looking for two things. It's looking for liquidity. It needs liquidity, and it's looking to rebalance. Now, there's an imbalance under here, so that's why I'm thinking this pulls back down in here. It rebalances, and if you want to consider where is their liquidity and where is the path of least resistance, well, we've traded into a huge resistance level. Look at this here, and these lows over here. This is big resistance. I mean, yes, it can wobble around here for a while and push through for sure. Just depends where smart money decides to price this, I guess. But what makes more sense to me is if they've loaded up down in here, there's liquidity resting under here in the form of sell stops, all right, under this rally. There's stop losses galore resting under here, and we have this imbalance. So for me to get involved, price has to drop back down to the high of this level here, and then I'm good to go. And you know, I'll go for, well, you've got this 50 and we've got 100 up here minus 100. That's a 4.8R. Let's just have a look and see what we've got here. Yeah, I mean, go for broke, guys. I mean, that's a 5.6R outcome. And what you could look to do if this plays out and we get a fill, and we see it gain a bit of ground, I would be inclined to then pull my stop loss to break even after we see it trending up. And you know, we've cleared these lows. You can see this trend that I've drawn here. Once we've cleared a couple of these swing lows, stop loss to break even, and then I mean, you can sit on that and enjoy the ride, because I think gold's going to trade north. If we look at this from an order flow point of view, considering the banks and you know how they're invested long. Right? This is a bullish trend. Have a look at it on the monthly and the weekly. Gold is bullish, so the banks are invested long, and I want to be on their side. Right? So we come back down into the 4H. Anyway, that's my entry point down in here. And look, if it happens to rotate and trade off without me, I'm happy to let it go, and I'll wait for the next opportunity. Now, here's another thing. The opportunity will come, if this is going to be bullish, will come. Okay, swing low, swing high, retrace. Swing low, swing high, retrace. Low to high, retrace, etc. We get an opportunity at every one of these pullbacks. Expansion, retrace, we buy. Expansion, retrace, we buy. And if you're really switched on, you can then, and I've mentioned this in other videos, you can build your position here. I mean, that's a huge payout by the time, you know, if this continues. And I mean, look, this concept I've mentioned in previous videos. Well, let's have a look back down. See down in here? And you're going to get it. Look, expansion, retrace. Well, that was expansion, retrace, expansion, retrace, expansion, retrace. And if you bought on every one of these retraces, look at the outcome there. Okay, that's huge, right? So that's the sort of thing that you want to aim for, is building a position and making a ton of money. All right, guys, look, that's my take on gold. If this fails to move down into my zone here, I'll let it go, and I'll be waiting for the next expansion and retrace opportunity if it maintains its bullish its momentum. All right, that's it. I'd love to hear your thoughts on this. Definitely leave a comment below and share the love. Your thoughts matter. And with that, I hope you have a great day, safe trading, and we'll see you in the next one.